Tesla Q3 earnings will be reported in about 5 days time, and it looks like, based on the numbers that I'm going to show you guys today, it's going to be a miss. Wall Street is expecting 58 cents. I don't know how they're going to get 58 cents unless we get some sort of a surprise revenue from their full self-driving take rate, which nobody knows how to calculate at the moment. But if they show that, then maybe they could actually, be a met at best. I don't know if they can beat this quarter. It looks like it's going to be another disappointing quarter, but I think Wall Street already know this. I think analysts already knows that this Q3 is not going to be good as well, but they're looking forward more towards guidance, and I'll talk about that at the end of the video. Let's go break down my numbers after you guys smashed that like button. Let's go. So here's my Tesla stock price prediction chart for every single quarter. And yes, this is available on Patreon. You guys can check the link right here. But some important things that I want to go through first is the average selling price. I put here a bit of an increase, about $200 more compared to Q2, $41,900. I mainly did this because of the Cybertruck, as they're ramping and selling more and more of it. And that is average selling price of that is, well, right now it's less than $100,000 because they're bringing the all-wheel drive now. But it's still pretty high. Credits here, I put here $650 million. This is very hard to predict because we don't know what's going on. No, we can't track it at all. In Q2, it was nearly 900 million, nearly $1 billion just from credits, which is just insane. So I brought it down to 650. This could be more. We'll see what happens in about 5 days time. Services, I increased it about 200 million to 2.8 billion with a 6% gross profit rate, which is about $168 million. This could be more as well, but I'm keeping it conservative. Leasing around 525 million, profits of 252 million, and vehicle gross profits of 14.5% more than Q2. Why? Well, because a little bit of increase in the average selling price, but mainly because we have interest rates going down a little bit. It went down 0.5%, and because of economy of scale, because Tesla did sell about over 462,000 vehicles compared to Q2. So more vehicles being developed, more vehicles being made, economy of scale, higher the vehicle gross profits. Now, again, I could be wrong on this. I'm trying to be optimistic here, to be honest with you guys. But that's what I think is going to happen. Energy did phenomenal. Year over year, growing 80%. If you do Q3 to Q3 of 2023 to 2024, up 80%, which is insane. This would be around $2.2 billion in revenue, and around a 24.5% gross profits would be around $542 million in gross profits for the energy part. They did about 6.9 gigawatts of energy, of deployment in Q3, which is absolutely a sheesh moment. Operating costs, I brought it down to $2.8 billion because of the layoffs they did in Q2. Those layoffs are going to be impacted in Q3. I'm not too sure. This could be even lower. Let's see what happens in Q3, but I think 2.8 billion is a reasonable number. Taxes around the same as Q2, and other income, which includes interest, around 350 million. Stock-based compensation of 400 million. And shares outstanding of 3.5 billion. Let's put the vehicle deliveries in for Q3, which was 462,890. And bam, look at all those numbers come in. Absolutely love it. Right off the bat, we could see Q3 revenue of over 25.5 billion, income from operations of 1.6 billion, and operating margin the same as Q2 of 6.3%, non-GAAP or GAAP of 1.5 billion, and non-GAAP of 1.9 billion, more than Q2, but nothing outstanding or anything. Now again, this doesn't include the FSD revenue and profits. I don't know how much of that is going to be included. I don't know how many millions of dollars that is, but that would actually help a lot. Now, as we can see, EPS gap of 44 cents, non-GAAP of 55 cents. So it's a miss because Wall Street is expecting 58 cents. So I don't know, maybe they're expecting higher credits for this one, maybe higher services, or maybe they're expecting Tesla to show the software revenues, the FSD revenues and profits. Not too sure about that, but at the moment, I'm saying Q3 is going to be another miss. I know it sucks. I know you guys are watching me. You guys are probably all on Tesla stock as well, or have a good significant part of Tesla, but it's going to be a miss. But here's the thing. Analysts are not looking, they probably know this is going to be a miss. They know this. They care more about guidance of what's going to happen with the affordable vehicles. I'll get to that in a bit. Let's finish this Q3. What the stock price could be if it was a miss. Now, knowing Tesla, I've been following for a long time. If it's a miss or a beat, nothing happens to the stock. Well, when it's a beat, it most likely usually goes up. But when it's a miss, it's down about like 1 or 2 or 3%. It's what the what Elon says, what really matters in the guidance call after that. But for Q3, PE, in order to match it to what it is right now of 220, we would need a PE of around 64, 63 to have the same stock price. So really, not much of a change for Q3. Not much of a change. Personally, I think if the guidance comes out and Elon says that, hey, affordable vehicles are coming out, we're on track until the first half of 2025, and it's within 6 months or within 12 months, I think Wall Street's going to like it, and I think we could see a spike and go up, maybe as high as 240s, maybe even to the 250s, which is a PE of around 73, 72, which is a sheesh moment, to be honest. I mean, that's what Wall Street was looking for robotaxi event. And if you guys were watching me during the live or even before that, this was a robotaxi event, man. This was not a new product unveil. It wasn't. And I don't think Tesla will even do a product unveil for these affordable vehicles. It's just going to be like, hey, it's on the website, go and order. That's it. And the price is $32,000 plus credits, maybe in the high 20,000s. I think it's going to be like this. It's going to be a surprise motherfucker kind of thing. But that's what I think Q3 is going to be. I'm going to bring it down to the same PE around 63, 64. Let's put 64 here, around $221 per share. Now Q4, I think they're going to do good in deliveries. I even increased the average selling price to 42,000, but the credits around 500 million. And then the services a little bit higher there as well, around 6%. Now this could increase as well, but again, I'm keeping these things conservative because it's hard to track. Leasing around 575 million. So you guys already know deliveries are going to be a lot more in Q4 than Q3 in my prediction. Vehicle gross profits of 14.9%. I do expect the Fed to bring down interest rates again next month and maybe in December as well, which will increase their vehicle gross profits as well. Energy here, I have it maxed out again at 10 gigawatts per hour. Not too sure if we will get that, of 3.2 billion with a 24% gross profits. Operating costs of 3.2 billion, taxes of 480, other income, which includes interest of 350, stock-based compensation of 500. This may be a bit too much, but I'm going to keep it at 500, and shares outstanding of 3.52 billion. Now, I think at the best case scenario, Tesla can sell 525,000 vehicles. Now, here's the thing. When Tesla does this, that means Tesla has only sold 1.819 million vehicles. So less than last year. And actually, analysts are expecting Tesla for this year, Tesla to sell or deliver about 1.781 million vehicles, which is less than 2023. Completely. I have it here at 1.19. I mean, I thought Q3 will be around 480,000 vehicles. So Q4 will be around 550,000 vehicles. So we can have around 1.85 million deliveries. But it looks like that may not happen. And I think 525,000 vehicle deliveries is the best case scenario. But let's put that in. 525,000 vehicle deliveries and bam, look at all these numbers come in. Love it. Right off the bat, we can see the quarter revenue for Tesla over $29 billion, which is a sheesh moment. Now, again, this is without profits from full self-driving and FSD. This doesn't include here. Nothing. So we're going based on what we already know. Operating margin around 6.2%, less than Q3's, but that's because operating cost is higher. And I put it higher because with all the innovation they're doing, R&D, that gets into, a lot of operating costs. Net income gap of 1.7 billion, non-GAAP of almost 2.5 billion, and an EPS of 70 cents. EPS overall for the entire year is $1.65, which is just terrible, which would mean the whole year of 2024, Tesla has only had a net income of just below $6 billion. Revenue is great, over $101 billion. That is fantastic, but net income below $6 billion. Now, here's the thing. In Q4 of 2023, they did have the one-time tax benefit thing, which contributed around $5.9 billion at the bottom line, which helped. Now, Tesla is moving Bitcoin here and there. I don't know what they're planning to do with Bitcoin, but if they have another $6 billion of tax inheritance, well, then that would be around $3.35 if it's $6 billion and we reduce taxes of the current one. So $3.35, I think we should be okay with that. But let's see what the stock price would be with $1.65.70. Again, guidance is more important here in Q4 earnings call. Guidance at the moment is more important because everybody knows the situation of what automakers or autos is at the moment. Interest rates are going down, definitely to help the, vehicle gross profits, 100%. We can even see in the total GAAP gross margins, they're not doing the greatest. They're staying flat. But if vehicle gross profits continue to go up, that would be a good sign. And if the affordable vehicles are coming out at, after Q4, which would be around 3 to 6 months time, well, that would be a sheesh moment. That would be really good. Now, to maintain Tesla's stock price in Q3 and Q4, we would need a PE of 133, which is absolutely insane. And again, if we had that tax inheritance loss of about $6 billion, that would mean a PE, not even 133, because that would be $446 per share. That would mean a PE of just around the same in the mid 60s, 65, 60 PE. But we don't know that yet. And we will see. And I asked you guys on X if that's what's going to happen. So if you guys know anything, comment in that post on Twitter or on X. But that's what it is. Now, here's the thing. My stock price prediction for end of this year is 350, and I'm not changing it. And that would mean a PE of 211 or 212, which is insane, which is crazy, because I honestly don't think we'll see Tesla in this PE end of this year. Now, yes, we'll have a Trump victory. We'll have, Tesla stock will rise up for sure if that happens. And then we'll have interest rates coming down. Then we have the affordable vehicles and FSD non-supervised happening in 2 states. And then, we'll have, there's a lot of things coming next year in 2025. And when the market is forward looking, and if Wall Street are forward looking, they would give it a much higher premium price, maybe closer to 300. But I don't think we're going to hit 350 this year. It's a very, 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 very slim chance we're going to hit it. A miracle has to happen to hit 350. What's more realistic is Tesla hitting 300 within 6 months. I have a full catalyst videos on how that could happen right here. You guys can check it out. But at the moment, I highly doubt we're going to see this. And again, 133 PE of $220 in Q4. We'll see what happens in Q4. Let's focus on Q3. But if all this goes and there's no catalyst and there's no affordable vehicles and Trump doesn't win and everything goes, sideways for Tesla, well then, man, 100 PE, which is very high, that would be a stock price of 165. But that's like worst case scenario, right? I mean, this could even go lower to like the 132. If worst case scenarios, no affordable vehicles, Trump doesn't win, there's no unsupervised FSD doesn't do well, which all these things are not going to happen. I think we are going to get a Trump victory. Affordable vehicles are coming. I think a lot of good things are coming. So I could see a high PE if there is a one-time tax benefit here in Q4. Now, here's the thing. Everybody knows that in the short term, analysts know this as well, that the EPS is probably going to stay stagnant for some time until interest rates come down more or they announce new affordable vehicles. Now, analysts, they're waiting for this. They're waiting for Elon to give an update in the Q3 earnings call, which will go live on the channel as well. They want to know that what's the update with this affordable vehicles? Are we still on track for the first half of 2025? And this affordable vehicles is known to be in the low 30,000s, maybe with the credits and everything in the high 20,000s. So they in their head, they're saying that this is going to be the compact car. But they want to know this. And if that's the case, and I have to agree with them, if that's the case, they're going to be making good delivery growth in 2025. And I have an estimate of around 2.4 million vehicle deliveries in 2025 because Tesla did say in Q2 earnings and in the earnings call as well, in the report too, that they are expecting their vehicle growth, their production is going to increase from 50% from 2023 levels. And that's because of the affordable vehicles happening in 2025. That would mean around 2.7 million vehicles produced. That's a sheesh moment. And they said this. I'm not making this up. They said this. So it's a sheesh moment. And that's why it's going to be a good earnings call. Q3 earnings call is going to be a very fiery earnings call that I think the stock can actually go higher, in my opinion. If, and I don't think it's an if, I think they're going to press Elon. And Elon knows it very well because they were expecting a robotaxi day, which is weird. But Elon knows it very well that he has to address this, that, hey, all he has to say is everything's on track. Everything's on track. We can't say anything more, but everything's on track for the first half of 2025. Once it's ready, but we're on track. Don't worry. I think that's all he has to say, and that's it. That's it. I think Wall Street should be okay with that. So, okay, let's see what happens in Q4 earnings call. So that's what I think is going to happen for Q3. It's going to be a sheesh moment, and it's going to be a miss. But again, it's not a big deal. Guidance is more of a big flipping deal. Now, here's the thing. This is short-term stuff. You got to listen to what other CEOs are saying about Elon and how incredible this guy is and why you shouldn't bet against him. Here is NVIDIA CEO praising Elon for doing the impossible. It's insane and it's worth a watch and it's crazy. Check it out, guys. You'll be pretty impressed on how a sheesh moment it was. Subscribe, get your About the Depth t-shirt, and I shall see you guys in the next video. See ya.